So on that weekly sell side liquidity, then we had that really nice strong change day delivery on Friday with that 4-hour SSD, right? We left these equal lows here on the ES. I wanted to see if price could potentially come back into this level before expanding again higher. But you can see that overnight, we simply put in an expansion model, and I'll show you on the 1 hour what that looks like. So in the 1 hour here, you're going to see what that expansion model looks like. We've had a couple of continuations. So you can see all of these white boxes here are fair value gaps. We had these internal range divergences in these fair value gaps overnight. So this is that 4-hour point of interest that was never engaged. So that was the one we wanted to see engaged, this 4-hour gray box right down here. Never got that engaged, right? But we did get an hourly continuation model, right, with all of this liquidity here. Let me make this a little bit less dark. There you go. So we got these hourly continuations every time we came into a fair value gap because we formed SMT like this. Right. So 2 pretty clean H1 M5 continuations using those change day deliveries to move higher. And we have another one priming itself right into the open here, actually, if you guys can see. We have another hourly inefficiency right here, right? Again, look at our hourly chart, another one. And from that hourly point of interest, we have another SMT forming. You can see that we have a couple of key levels left in our higher time frame charts. I have this swing high on the hourly, which is a New York AM session high, an intermediate term high marked out. That's 6078 and then 21955. And then we have the previous weekly buy side, right? So that's our previous weekly high. And of course, above that, we have all-time highs. But just in the context of this weekly expansion, we have this buy side liquidity, right? Going from internal down here, right, with an external raid. So internal on NASDAQ, you guys can see this fair value gap, all the way up to this external, right, with the SMT down here inside of this fair value gap. So that's our higher time frame look. And unfortunately, the London session gave us a large expansion, which invalidates a high probability New York expansion as well. So what we have to do is, although this H1 M5 model here is printing, like you can see, I'm more hesitant on this H1 M5 model than I was on this one here, for example. You can see this one that printed right here. Simply because we have now hit our daily buy side up here, right? This is the previous daily, or this is daily inefficiency, right? This is a fair value gap on the daily as well. We're inside of a daily SIBI. This is a 4-hour swing point. We've had a large overnight expansion. So potentially seeing a retracement into discount would be nice. However, I'm also considering the fact that ES looks extremely bullish, like much more bullish than NASDAQ. As you can see, it's trading higher up into its range already, right? Consolidating above its daily inefficiency here. And then I'm looking at the 6078 level. So potentially a continuation today on ES would be my thesis. However, I do need to see a little bit more manipulation. Now, I know we had that 830 manipulation, so it's more of a judgment call than anything right now, that I think we're just a bit too premium in this range. But I will say, market looks extremely bullish, and the order flow is printing continuation patterns, right? Right into our equities open at 9:30, we're printing a continuation pattern, right? With that H1 M5. So the last thing I'll put on my chart here. So we printed this higher time frame SISD on ES as well, which is why I'm more bullish on the S&P than I am on NASDAQ. You can see we have an hourly swing point here. So market comes from internal to external like this. And NASDAQ fails to close above in this displacement leg. ES actually closes above this external range high, closes above, and it changes delivery state on this higher time frame. So for me, going into the session, I'm looking for the strength of ES to continue. Framing a continuation at the moment, but I really do need to see if we want to manipulate more. The draw on liquidity for me would be this swing point here on the hourly, and maybe the halfway point of this daily fair value gap. Both of which, I mean, the halfway point of the fair value gap is only 5 points away, right? So, or in this case, 9 points away. So there's not a huge draw on liquidity there. I'm sniffing my nose because I'm back with my dog and I have allergies, but I'm just not used to it. Yeah, so it'd be maybe this hourly swing point. We do have the buy side on the opposing side of the range. That would be a really large expansion candle for the day, almost 2% on the ES. But I would rather see the divergence, up here, potentially to set the weekly profile, a Monday high of the week or something like that. And then we have NFP on Friday, and we have a bank holiday on Thursday. So we won't be trading Thursday, Friday, obviously. Thursday, there is no trading. And then Friday is NFP after a bank holiday, which I'm not really interested in trading. Generally speaking, NFP is a lower probability day, and then you add in tandem a bank holiday with it, and it's less enticing for me to trade that day anyways. So today will be a good day to trade because it's Monday NFP. We also have that bank holiday on Thursday, so the week is not fragmented as of yet. But yeah, looking for that continuation model. I'm going to see what the open prints. Right now, I'm more interested, like I said, in seeing this divergence of these hourly highs potentially. Right, like that. And like that. I'm more interested in that divergence printing, right? And then us seeing a greater retracement. As to where I'd like to see price go, I mean, a couple areas we can have marked out is just going to be EQ of this range, right? That's always a safe bet. So we have a really, you can see consolidation, we have a consolidation function put in the market right here. Now we have some small SMT below these lows, but there's actually no swing point divergence on the hourly if you pay attention. This is very similar to Friday, where we have these equal lows put in the market again. So equal lows here, and then we have equal lows here. Do you guys see that? So these two things are very similar dynamics of price. And as you can see, expansion followed both of them, right? So maybe we're going to leave these equal lows on both this consolidation and this resting consolidation for the sell side of the curve. So I'm just looking at a discount retrace potentially. Something that looks like this. Right? This is EQ of the range. Look at dark green color. Right? That's EQ of the range. Likewise, this is EQ of the range. Again, a dealing range is defined by an area that takes out liquidity to an area that takes out liquidity. So you can also be defining your dealing range as this swing point, right? If you think it's going to be a less shallow retrace, which is probably a higher probability dealing range since we have a nice SMT divergence that forms in here. And we have this opposing candle on ES. Do you guys see that? So this is an opposing candle on the S&P. And it's a up close candle on the NASDAQ. This is referred to as a precision swing point, or you could just say the ES puts in a opposing run and then closes through it. So this is a order block, right? So this here is an opposing run, right? And then ES closes through that opposing run, indicating bullish order flow. So I have those levels marked out for now, right? We have the SMT in the gap that we know about. Get rid of that for a second. So let's see what happens. I'd be more interested to see kind of discount of the range, maybe another SMT, and then ES to potentially hold that higher time frame SMT, and then we look for longs, right? I don't trust this changes day of delivery here on the ES at the moment, nor do I trust this changes day of delivery here on NASDAQ at the moment, simply because it's too premium of the range for me. So coming back into this inefficiency would be a nice, confluence. Okay, let me make this a little bit less bright. These types of mornings are always tough, right? Because we have to trade after the London expansion as opposed to trading the expansion. Yeah, so getting on side with price is going to be tough, right? But that's okay. We weren't built for the faint of heart, I guess. I don't know. Make London streams great again. Maybe we should trade London. Yeah, London was very, very bullish. I mean, London offered a very clean continuation, two clean continuations. So, in my opinion, this first continuation right here, where is it? So you can see we have this changes day of delivery right here with this opposing run. Again, you can see we have the a new day opening gap, right? We open, put in a failure swing to the previous day high, which is very nice to see, right? If we're bullish, putting in that failure swing, then price trades down. Mango, come here, bud. Where is he going? My dog just wandered off. We trade down, and then we get this change day delivery higher. So you can see this is a very nice level, this opposing run to get involved in. That was the first clean continuation. Then we have a 30-minute SMT in here. And then we have that really, really nice hourly print right here at 6 a.m. Both of those were fantastic, like, I think, trade setups. Unfortunately, I was sleeping for both of them. But those, I think, were both really, really clean. Like, if you look at this one here on the hourly, it's pretty much textbook, right? Very clear draw on liquidity of this previous weekly high. So obvious bullish order flow. Very, very nice hourly candle open. So 6 a.m. is the opening price. So you have this. That's the opening price. Then we open and we trade lower, creating an order block with SMT, change day of delivery through it, retest, go higher. This is like one of the cleanest entries of the day. Unfortunately, this didn't happen at 9 a.m., right? Or 10 a.m. It happened at 6 a.m. with that 4-hour candle open. So that's that 4-hour 6 a.m. opening price, right? Right in here, forming this 4-hour wick. And unfortunately, I was just sleeping. But I think that was the major look for the day. Now we have to be a bit more cautious with longs. Hi, Fees. I remember you mentioning that if previous day a lower high or previous week lower high so before open, you would generally avoid trading continuation. Yep, and that's why I'm waiting to see more structure. Now, for me, there's still higher time frame draws that are fairly close to where we are. When I say close, I mean this year is like another percentage, right? 0.5%, 30 points. It's a large expansion, but for me, there's a very clear institutional draw on liquidity, which is going to be this weekly external range high, right? So because I want to see price eventually reach up into here, and we have not yet hit that point of interest, any longs towards that are going to be still more favorable than a reversal. I would not trade against this order flow. That's in the same way that I would not try and target these lows. Like, remember I got stopped out on Friday trying to target these lows? And the reality was that the market just did not want to price these lows. These lows, you can see by the change day of delivery right here. These some different colors. Right, by the change day of this delivery, we're not repricing these lows anymore. Even this change day of delivery here, right? We're not repricing these lows, and NASDAQ had it on that hourly candle earlier, right in here. So I'm going to be less favored to trading against this order flow, which is very, very established as bullish. There's not a single bearish thesis here. I can't frame a single bearish confluence, as opposed to when we sweep previous day higher, previous day low, counter trend. So we're a retracement, right? Like we saw, for example, here. Here's a good example of how that would work for a retracement, right? So we come into the New York session on Friday, running aggressively above buy-side liquidity in a sell model. I wouldn't mind looking for some sort of short here, right? Because I haven't, right, invalidated kind of this price leg yet. Likewise here, we run much higher in the London session, but look at this. We have an established price leg lower. We have a failure swing to our major liquidity, which was right here on the NASDAQ, I think, right? Right down here. We have an established failure swing. Then we run up into a point of interest. And then I'm more likely to trade the reversal. And I think it was also on Tuesday, you'll see a very good example of that. So on Tuesday of last week, you can see, or it was actually Thursday. On Thursday of last week, you can see that we formed this large SMT where NASDAQ fails to take out the Monday and Tuesday low resistance liquidity, and ES takes out both of them, right? When we have that kind of protraction profile into New York with established bearish order flow, right? This swing here down, I'm looking to target. This swing point down here. Mango! He's eating toilet paper. No, he's in the bathroom. I just heard him. Mango, come here, bud.
He's playing with his bones.
Oh, I see. So when you see this kind of established order flow and then this SMT divergence, that's when trading that reversal is much higher probability because there's a higher time frame draw. For me, Sox, the higher time frame draw is still higher. So maybe put him in his kennel so he can rest a bit. Mango, go place. Go place, bud. Go place. I'm home with my dog for a few days. We got an SMT inside that daily IRO. So here's our daily internal range, which is the same thing as this previous weekly high, right? This weekly external range high. Now let's look at the hourly charts. We don't have any major SMT divergence that's forming except for if we look at this inefficiency. Right? So that inefficiency would be a PD ray divergence, which would be a lower time frame SMT. But again, a 15-minute divergence or a PD ray divergence to fade this order flow is not what I'm going to do. So I'm going to look for continuation if it's offered. but I want to see price probably come back into this area of price here. All right. Yeah, this is the hourly SMT that we've currently printed. Yep. At the highs. We talked about that, right? Which is why we don't want to see we don't want to trade this change day of delivery right now. The reason why we're not trading this SISD in here is because we have this hourly SMT. So if price wants to go for a retracement lower, I'm okay with seeing that. But I don't want to trade a reversal, guys, until I get at least a 30-minute change day of delivery, right? We talked about this last week. Remember, I posted a lecture on reversal profiles. I don't trade the reversal until I get that higher time frame confirmation. And for me, the reversal area is going to be here, guys. It's this precision swing point. So if we close through here, then I'll look to trade back into the opposing side of the range. So if we traded through here, the trade idea would look like this, right? If we close through there, but if not, the order flow is established to be bullish, and I still have bullish points of interest, right, above market price. I have this halfway point of the daily inefficiency, that's CE of the SIBI, and then I have this hourly swing point up here, which is just buy side liquidity on the 4 hour, or I think it's the 1 hour actually. The 1 hour. Right. So let's see what happens with this, equities open. Let's see if we get that. If we get a reversal, then we can look to trade it, right? We have to see that confirmation of order flow, which is why we didn't trade this long, right? So although it printed that 5-minute long, guys, right? That thesis for a 5-minute long. Again, I'll remind you what that looks like. So here's an example of that H1 M5 realignment, right? With this changes day of delivery right in here. You can see that same level. That's a good long to take. This one right in here, you can see, well, it technically prints the same thing, doesn't it? SMT right in here, right? And then we had a change day of delivery. But I don't trust that because we have two confluences that work against that thesis. One, we sweep out the hourly high on ES, okay? So that's first factor that I'm not comfortable with because NASDAQ does not change delivery state above that high. ES does, which is why I don't trust it. Secondly, we are such a premium market for this expansion. I want to see a meaningful opposing run to involve myself in, right? This here is a meaningful opposing run. Let me get rid of this. Actually, let me use that higher time frame. So if price is going to reverse from here, right? Let me use this higher time frame because obviously we're not bouncing off that equilibrium of this time frame. If price is going to give us some sort of retracement here, below here, I would look to short. But for now, this is untradeable short for me because I'm not entirely convinced on the direction of delivery. So this short could just be inducement like this short was on Friday, right? Remember what this candle looked like at one point in time, guys? Pay attention to what this candle showed you at one point in time. This candle looked like this. Okay? It was a large consecutive down close down candle towards this area, but you can see that that candle wicked higher and it shifted delivery state back higher on Friday. Let me show you. Right in here, it wicked because the order flow was established to be bullish. So we don't want to catch, right, the top of the market. That's not a good, it's not a high probability look because we need to see candle body closures. Look at this wick. If you look at just the 5-minute chart, right? Look at this. Imagine if you're offside on this, guys. Just in the past 15 seconds, you're off 60 points, right? These are the most difficult areas to engage price, in my opinion. These are the most difficult areas to engage price, in my opinion. Because if it forms an exaggerated manipulation, right, you can be offside. But if you had a retracement thesis, that would be a very, very nice trade to take, right? Like we talked about. I would just much rather take one high probability trade for a day. And then meanwhile, Rue made 2K on that wick. So everyone feel FOMO. That's my student, by the way. That's why he works for me. I pay him the big bucks. Now he pays me the big bucks. All right, so let's see what happens into this open and what happens with the delivery state, if it shifts or if it does not shift. That's the most compelling argument I have at the moment, is to see if we get this change in state delivery. We have equal lows priced in right here on the NASDAQ, right? which again, depending on the context of delivery, can be very bullish, right? Equal lows can be a very bullish context, like we saw here. Let me go back down to a lower time frame, right? We saw equal lows here, these Asian lows on the ES, equal lows, right? So equal lows can be bullish depending on the context, or it can be bearish if we're engineering liquidity to go lower. We just don't have a confirmation of order flow yet. That was a pretty aggressive candle. So we'll see what happens, right? For me at the moment, until we get this, at least this 30-minute SSD here, I'm not interested in shorts. I'll see how the 30-minute candle closes with equities open, obviously, right? We also have this discount area of price that price could draw into. I'm just going to get rid of this. You guys can see that the equilibrium of the range is inside of this gap, okay? So the equilibrium of this dealing range is inside of this gap. But you can see this 4-hour candle is aggressively rejecting the previous week high. So it depends on how we close, right? Again, this is an opposing candle right here in the delivery state, right? That's an opposing bearish candle. So we will pay specific attention to this opposing run, right? And if we can close above it, what does that become? It becomes a breaker, right? And if we close below it, likewise, look at NASDAQ. This is an opposing run in the delivery state we currently have, which is bearish up until this point, right? Swing high, opposing run, distribution. So this is a breaker, right? Or an order block in this case, not yet a breaker. If we close above it, it's a breaker. So we're just watching how the candles close here, guys, right? Yeah. Opportunities are going to exist in a retracement if it offers it to us. They're also going to exist in a continuation if it offers to us. What about that lower FVG for a long? That 4-hour gap is very nice point of interest. Yeah. This is right here. This is that point of interest that would be ideal, actually. This H4 imbalance. However, we have to look and consider the structure that's above us, right? So yes, there's equal lows here on the ES as well. But again, you can see we have this opposing run candle on NASDAQ. Pay attention to it, right? And then we have a closure through the opposing run candle. So that's bullish order flow. You can see how ES does not price in that opposing run. It prints an up close candle. This is called a precision swing point, but you don't need to know that. What you just need to pay attention to is what types of candles are being respected, down close or up close, right? In this case, we respected this down close candle and closed above it. In the same way that we had these equal lows here on Friday, equal lows, but we closed above this down close candle. And you can see we respected that down close candle. We did not come in to these equal lows. Do you see that? So I will never try and catch this move. And on Friday I did because I got induced into the lower time frame here. This looks so juicy on the lower time frame, right? And then upon journaling, I realized that I was literally induced into taking a position inside of the opposing candle, which is never a good idea, right? That's exactly why I lost my trade on Friday. Is because if you look here on a lower time frame, Ellie, it looks great, right? Look how good this looked at one point in time, right? You see this? This looks phenomenal to go all the way into these lows. But I paid not enough attention to the higher time frame where this opposing run was closed through, repriced, and this becomes protected liquidity, right? This is the protected liquidity, right? Or protected low, some people call them. That's why delivery state matters a lot. That's why you have to wait for higher time frame candle closures, right? And it requires patience. And I didn't have that patience on Friday, to be completely transparent. Like, I didn't have that, and that's why I lost. Yeah, I was against the 1 hour SSD on Friday as well. Yeah, you put this in our channel, actually, Chrono, right? Like, you talked about how this 1 hour SSD was the level I had marked up, right? This was the level I knew I wanted to see price hold. And yet in this 5-minute price action in here, I was heavily induced into shorting. And I went into my journal and I noted that, right? Because, you know, you're just a trader, right? At the end of the day, you're going to make mistakes. You're going to make emotional mistakes. And you're going to be induced by runs like this because remember what this looks like on a lower time frame, which is why I have my higher time frame charts up right now and not my lower time frame charts. Because in a lower time frame, this is a price leg that can induce a lot of FOMO, which it did for me. Because I'm seeing invalidation of PD arrays, strong closures below swing lows, and then I'm failing to recognize where we are in the higher time frame, right? This is just a higher low, right? And I did not recognize that, which is why I'm not making the same mistake today, which is why I'm intentionally staying on my higher time frame chart with you guys, right? I'm not even looking at the lower time frame charts until we get this delivery stage shift, right? We have an hourly imbalance in here. We have an hourly imbalance here, right? We have, again, look at this opposing run on the ES, okay? What do you notice about NASDAQ? It does not have that opposing run. So this is, again, a precision swing point, okay? But you don't even know what that means. It's just an opposing run. And once we close through an opposing run, if the order flow is going to support higher prices, this opposing run will be utilized as institutional support, okay? That's what an order block is. It's a manipulation. Yeah, it was a good mistake because at least I learned something from it, but it's teaching me something right now about today's delivery as well, right? And what I want to be involved in. So as you can see, we did not get that change in state of delivery, and in fact, we form equal lows. Now, equal lows are a very bullish indication of order flow in a buy program. This is called inducement, right? So in a buy program, you're going to see we have the inducement of equal lows. Now, go and confirm that. Don't just take my word for it. Go see if that's true. You'll be able to see it right here in ES above this 4-hour gap, and you'll also be able to see it on Friday, right? The inducement of equal lows in the form of sell-side liquidity is confluence of a buy program. So what we want to see is if we can get what? The change in state of delivery, right? Into, again, this opposing run on the ES. You'll see right here is an opposing run candle. So I can mark that out. I still don't want to have too many levels on my chart. I don't want to confuse you guys with all of these lines and all of these levels. But again, this is the key level on ES. This is that precision swing point on NASDAQ right here. So I could mark that out as well. And now we want to observe if we can get a protection of these lows based on market structure. And the market structure will be a change in the state of delivery, right, above that high. Validating this opposing run here, and this is a breaker, right? If we get a change in state of delivery above this high, this validates this is a manipulation of order flow as opposed to a expansion lower and a reversal from this SMT high. So right now, taking a trade in this range is quite simply impossible from a structure standpoint, right? Where you don't know which direction this is going to go in. We have SMT at the highs, right? We have a large opposing run. Now we don't know if this opposing run is a reversal or it's a retracement. But the structure that we get out of this print in the next 30 minutes is going to tell us if it's a retracement or a reversal, right? So we're getting a strong rejection of the support is what you would say if you were a retail trader. Now, support in this case is just the same thing as institutional opposing runs or order blocks, right? So mark out this candle. Look at the fair value gaps that we had marked out, right? This is why we don't get rid of these gaps. Even though at one point in time, what does this candle look like, guys? It looks like this, right? At one point in time, this is the candle we're trading. And that looks very bearish, but we don't short it yet. It takes patience, right, to understand that. And it's not easy always. And you don't long this either. Now, this looks fantastic as a rejection of these lows, right? This is a nice precision swing point, OB, right? So for me, this looks very nice, right? This is again confirming my long thesis. I would like to long this, right? So we have the inducement of equal lows here, right? Which is really, really bullish, right? Like we talked about earlier. So if we could get a change in state of delivery through this high, I'd be looking to long the market, right? That's just the consistent argument we've been having kind of the whole time, right? And that'll be aligned with our volatility driver of equities open because we don't have news today. So 9:30 may offer an expansion. Now, I probably wouldn't long the 5-minute candle closure through this high. I would look for something like this, guys. And then a retracement into like a 1-minute PD array because this is a really large range, right? So if I long here, to expose myself to a 60-point stop loss, immediately. Maybe there's potentially the option for, you know, a more refined entry. Yep. This would also be a 4-hour SMT. Yes, correct, Rue. And it's also, more importantly, it's this PSP on the 1 hour, right? This precision swing point, this order block. And then the delivery state shifting here would be the confirmation of that. So we'll see how this 5-minute candle closes. That's going to be aligned with equities open again. Really, really strong reaction off of our 30-minute order block as well in here. You guys can see that. That's a position swing point. Here's those fair value gaps we talked about. Is why we have them on our charts, because we don't want to short this with no reason, right? The order flow is extremely bullish. We talked about that, right? We said that the order flow is bullish, and if we get offered a retracement, we want to go long, not short. And the market has done that essentially for us right now, right? It's offered us a retracement. But we have not got a change day of delivery, right? So we're going to just keep watching. These are the tough ranges to trade because there's opportunity on both sides of the range. Like, you can trade this short and you can trade this long, but neither is structurally confirmed. I'd rather lose a trade that's structurally confirmed. It's a very long wick, eh? Yeah, this would be an inversion 5-minute fair value gap as well if it prints. Now, as you can see, the ES actually looks a bit weaker here than NASDAQ. So again, my long thesis would now be on NASDAQ as opposed to ES if we got that change in state, right? We have some data coming out that's medium impact news at around 9:45. So you can see how the relative strength and weakness will shift. There we go. It's a really, really strong candle closure there. So we could look to actually scale into a bit of a position here, right? Early if you wanted to. Now, you can wait for the confirmation, right, of this order flow, which would be ideal. But you can also look at the lower time frames here and see if you have a point of interest. Right now we have another SMT forming at the highs, right? That's why we want to wait for that confirmation of order flow. Because right now, all we can see is that price, right, is now has a down close candle on a lower time frame, but has formed another SMT at the highs. So we want to be paying attention to what happens here. Again, this is where you have to, you know, manage your risk. If you want to get involved early, if you think there's going to be a price run higher, then you have to risk that this candle wicks and closes below, right? Which it very, very easily could with this large expansion, and you can see this projection of this high with another SMT forming, right?
Again, early on that, yes. Maybe too early without confirmation.
Yeah, I'd rather see this 5-minute candle close, right? The confirmation here is absolutely critical for me. However, if your risk management won't allow for a crazy stop loss, then you'll have to use something like a lower time frame, guys. You'll have to use like a 1-minute level here, and that's just the reality of it, okay? And I'm being very honest with you because in this case, with a 5-minute confirmation could be an expansion candle, right? You can see we have the lower time frames printing here, which is why it's up to you as a risk manager as well to see what your risk appetite is with. I'm not in South Africa yet. Nope, I'm going on the 10th, flying on the 10th. And I'll be there for a month. That's where I'm doing most of my work.
6020. Yes.
I'll be waiting for this 5-minute candle to close, guys. And if it closes with a change day of delivery, and then I have a good look for this hourly swing point, right? Then for me, my next look is going to be this hourly swing point up here, right? And this CE. I can even use this wick as an area of potential partials, which I will use actually because it's a very, very nice point of interest on my chart. So what I'll do actually is I'll remove this CE as a level and I'll use this wick for a better RR trade.
Are you in?
No. Okay, so the 5-minute candle, when it closes, I will look to enter into a position, guys, targeting this point of interest. This is an H1 breaker. Okay. And I can mark out that same H1 breaker on the ES actually, which you can see is much closer to our buy side liquidity objective. So for me, marking out both of these, the breaker, I can mark it out as well, right? This is our H1 BRK. So this is our key level that we'd be targeting in the market. And again, you can see this 5-minute candle might offer an expansion, right? What I'll do, guys, I'll look into an opposing candle potentially on the 1-minute chart, and I will look to enter here if it gives me a retracement on this 5-minute candle close. So first step of the algorithm, I need to see this 5-minute candle close above, and then the second step, I want to see a retracement into an opposing candle. The stop placement is always going to be at the low of this price run, always. So it would have to be something like this, right? The rejection block low, and I'd be targeting that high, which is roughly a 1.5 hour trade, 1.4 hour trade. That's how I do my stop loss. I don't refine my stop loss on anything lower than the time frame of interest. Okay, so now we have this 5-minute change day delivery. If we can come back into this opposing candle, I'll look to get involved. If not, then you can take a market entry here, but it's just a lower risk to reward for me. Right, so I will enter into a position and scale in once I get that opposing run. So if we retest this candle here, that's where I'll look to get involved. Even into this low, I'll look to get involved. You can see we have a divergence of this low right here with the ES. So again, if we can come into this opposing candle, that's a good fill for me. Or if ES comes into here, likewise, if ES comes in, I'll also take it. Going to be watching, guys. Okay, so I just got filled in when ES hit that. So now I'll be looking to long the market here. And I'll be looking to target my breaker.